Matthew here with Business then, and today we've got the Chinese leader Wen Jiabao. He's in Brussels today for talks. What's on the agenda?
Well, there are a number of trade disputes going on between the EU and China at the moment. One of those relates to solar panels. The EU's been accusing China of selling them effectively at lower prices in Europe. Another one is around telecoms. Again, EU accusing China of giving illegal subsidies to two major manufacturers. Reports in the FT this morning, actually, that one's being stalled for the time being. But regardless of all of that, trade between the EU and China is really important. It was valued at about 430 billion euros in 2011. Exports, however, in August to the EU were down by 12.7%. Well, earlier we spoke to our correspondent in Beijing, Henry Morton. He said that the Chinese are particularly keen for Europe to sort out its problems.
The EU, China's largest trading partner by far. China's economic growth, almost 50% of it's driven by exports. Obviously, if your biggest export market is suffering, if consumers are not buying any of your exports, then your economy is going to suffer. The Chinese are extremely keen for the Europeans to get their act together and get out of this current situation.
Henry Morton in Beijing there. Meanwhile, there's new data from China on the state of the economy there.
Yes, now this is the monthly PMI data that we get to show the state of the manufacturing sector. Now, the key thing to look for with this data is the number above or below 50? If it's above 50, it's good news. It means things are growing. But as you can see here, it's below 50. Manufacturing continuing to shrink in September there.
That's China. Also, some data out on Japanese trade today.
Yes, now this is the trade deficit in Japan, which was up to 754 billion yen in August. That's 7.35 billion euros. And exports also down for them, 5.8% down. And, well, there's an ongoing dispute, actually, with China that's causing problems for them and hurting trade. And the country's also importing a lot of oil after it shut down almost all of its nuclear power facilities. But the strong Japanese yen is also a major drag on exporters, as our Tokyo correspondent reports.
When he built this aluminium plant 5 years ago, Yoichi Marumo never thought he would one day move abroad. Today, the Honda and Toyota supplier is moving part of his firm's production to Thailand and is also considering opening a plant in India.
Many of my clients went abroad, especially to China, India, Thailand, and Vietnam. These car makers now need components that are manufactured in the same place as the vehicles.
Japanese car plants produced 9 million vehicles domestically in 2011, compared to 12 million in 2008. That represents a massive exodus of production. Now more than half of Japanese cars are made abroad. This consultant is visiting Marumo's plant to help Gunma Seiko organize its move overseas.
Recently, highly competitive products have appeared on the export market, such as South Korea's Hyundai. Japanese car makers are not invincible anymore. Furthermore, because of high yen, Japanese cars have become too expensive if they are exported from Japan.
Tougher competition and declining car sales in Japan have contributed to the shift. In addition, car makers have been forced to look overseas by the strong yen, which has risen 30% against the US dollar in the last 3 years.
In spite of the yen's rise, car makers don't have the option of raising their prices for consumers abroad. They have a choice: either cut production costs or sell overseas at a loss.
Against all expectations, employment at automakers in Japan has not suffered as a result of mass relocation, and salaries have remained stable. In the first half of this year, Toyota regained its position as the world's biggest car producer for the same period.
Yeah, latest from Japan there. What about the markets then? How are they looking?
Yes, well, let's stay in Asia and have a look at markets there. And of course, yesterday we saw the Bank of Japan announcing some stimulus, which gave markets a lift, but different story today. Those trade deficit figures pulling down the Nikkei, 1.37% down. Other markets following suit. Over in the US, it was a different story on Wednesday. Markets made some small gains, actually. There was encouraging news on home sales there. They were up 7.8% in July, and that took them to a 2-year high.
Let's get a little bit closer to this part of the world then. Eurozone, Spanish and Italian leaders are going to be meeting today.
Yes, Mariano Rajoy and Mario Monti will be in Rome this morning, meeting up. And there's also a very important test for Spain in the bond markets today. They will be raising money by selling 3- and 10-year bonds. Now, the borrowing costs for Spain, which we always keep a close eye on, remember they used to be above 7%. They've dropped dramatically in recent weeks. That followed the announcement of this bond buying programme by the European Central Bank. The yield on that 10-year bond fell right down there, as you can see. It just ticked up slightly in the last few days as investors wonder whether Spain is going to request a full bailout. Well, meanwhile, of course, 1 in 4 people are unemployed in Spain, and that's making it ever more important for them to manage their budgets. Well, one area that seems to be booming there is the second-hand market.
Searching for a good deal. The country is in its second recession in 3 years, and taxes are on the rise. Tough times that have shifted consumer habits.
Some of our customers used to only come to donate clothing, but now they shop here as well.
With consumers in a pinch, retail sales have dropped for the second straight year. Unemployment is at nearly 25%, and sales tax jumped to 21%. The trend of shoppers looking for second-hand goods extends to the showroom floor. 70% of cars sold in Spain are second-hand, and half the cars in the country are more than 10 years old. Since the crisis began, this dealership changed its inventory to include more affordable cars.
People used to be able to buy a car more easily, they'd get loans easily and go into debt. Nowadays, they prefer to buy a car that's a bit cheaper and pay for it up front.
Spain's public sector is facing layoffs and pay cuts. Inés Serrano hopes to save as much as €7,000 buying a used car.
I am affected by the cuts because I'm a civil servant and I need the car for work and I need to change it relatively frequently.
Consumer confidence is down and there are frequent protests over the government's handling of the crisis. Madrid aims to slash €65 billion from the country's 2014 budget with tough austerity measures, making some in the retail industry think the trend towards second-hand goods is likely to continue.
Well, now let's get some more of the day's other business news, shall we? There's widespread disruption in India as protesters oppose new economic measures. The proposals include letting foreign companies enter India's retail market, and a rise in the diesel price is also on the cards. Railway lines were blocked and markets closed in the action.
Lufthansa is planning a new low-cost brand. The service will carry around 18 million passengers a year. No name has been agreed for the airline, which will launch next year. But Lufthansa recently been hit by a series of cabin crew strikes. It's also in the middle of a €1.5 billion cost-cutting programme. Going to talk rich people now, because the wealth of the richest people in America grew faster than the overall economy last year.
Yes, this is data from Forbes, Stuart, and it says that the worth of the 400 richest people grew 13% to $1.7 trillion. Now, that's far outstripping growth in GDP. Now, this is 400 people own 1/8 or are worth 1/8 of the total US GDP, and that's 311 million people live there. It's incredible, isn't it? Now, the richest person is still Bill Gates, as he was last year. And then we've got the Walmart family in there. Those are the Waltons, as you can see, and others. Now, I thought I should point out one notable loser this year, who we can all feel sorry for, is Mark Zuckerberg, the founder of Facebook. Now, he lost $8.1 billion. That's a lot to lose.
This is on the exploitation, presumably.
That's right, yeah. Now, he's dropped from 14th to 36th place, but I can see you're tearing up a little bit there for him, but don't worry. He's still worth $9.4 billion, so he's still a little bit ahead of the two of us.
Very, very sorry for him. Yeah, I feel so good for the Waltons, though. I thought they just lived in a little house in the middle of the outback somewhere. Not that you have the outback in the US, but you know what I mean. Matthew, thank you very much. Matthew with the business. On France Fan Camp, more from him in just over an hour, and the latest news after the break.